And people buy this junk all the time. I made money in Dunkin' Donuts. I can understand it. When there was recessions, I didn't have to worry about what was happening. I could go there and people were still there. And you laugh, I made 10 or 15 times my money in Dunkin' Donuts. Those are the kind of stocks I can understand. If you don't understand it, it doesn't work. This is the single biggest principle.
Let's kick things off with a question. Is it worth investing $100? Hey, I'm a 15-year-old in high school, and although I've always thought about investing in stocks, I don't understand it that well, and I don't have that much free time. I'm in school when the market opens and closes, so I never invested. I have a custodial account, and I was wondering if taking the time to invest $100 will be worth it in the end. I don't have a job yet, so any money is better than no money for me. I also fear that I could lose most of this, so if someone could give me some advice for the current stock market, I will appreciate it. Thanks. Okay, before I get into this question, quick disclaimer. I'm not a financial advisor, and this is for education purposes only. Please make sure to read this disclaimer fully, and let's get into it. Okay, you're a 15-year-old in high school, and it says that you've always thought about investing in stocks. If you're like me at 15, you may have come across the S&P 500, which is the overall stock market. What do you see? What I see is an upward trend. Here's a better chart of the S&P 500 index, statistics by the decade. We just wrapped up 2010s, and now we're on to the 2020s. And you'll notice the annual return was 11.2%. Annual return including dividends was 13.5%. For the 2000s, the annual return was negative 2.7%. If you include the dividends, it was negative 0.9%. So not 1%, but 0.9%. Looking at the 1990s, the annual return including dividends was 18.2%. 1880s was 17.5%. 1970s was 5.9%. 1960s was 7.8%. And 1950s was 19.3%. You'll notice a pattern here, right? The majority of the decades are in the green, meaning a positive number. 19.3, 7.8, 5.9. The one decade that the annual return with dividends was in the 2000s. So to your first point, I could definitely see why you're interested in stocks. You probably have some money saved away and you're looking to multiply it, just like me when I was 15. Most importantly, you mentioned that you don't understand investing in stocks. Luckily for you, you have time on your side. You're only 15 years old. When I was 15, I was only a freshman in high school, and I was the same as you. I was just like you. I knew nothing about the stock market, but guess what? I educated myself until I did understand the stock market. This included reading a lot of books, reading a lot of articles, and doing a lot of research overall. Just like in sports, I wanted to find out who the best players were. But in this case, it was the investing world, and I found Peter Lynch. Peter Lynch, as you could tell from this Wikipedia page, he averaged a 29.2% annual return. He grew $18 million fund to $14 billion. So in my mind, this is a guy that I wanted to learn from when it came to my investment strategy. As a reference, let's go to a quick clip of a lecture that he did in 1994. He explains that any small investors do have a chance at picking stocks, and he also explains that the public can do better on their own.
I frankly think it's a tragedy in America that the small investor has been convinced by the media, the print media, the radio, the television media, that they don't have a chance. That they don't. The big institutions with all their computers and all their degrees and all their money have all the edges, and it just isn't true at all. And when they're convinced, when this happens, when this occurs, people act accordingly. When they believe it, they buy stocks for a week, and they buy options, and they buy the Chile fund this week, and next week it's the Argentina fund, and they get results proportionate to that kind of investing. And that's very bothersome. I think the public can do extremely well in the stock market on their own. I think the fact that institutions dominate the market today is a positive for small investors. These institutions push stocks on usual lows, they push them on usual highs. For someone that can sit back and have their own opinion and know something about an industry, this is a positive. It's not a negative.
There's so many ways to learn about the stock market, so that's no longer an excuse now. You mentioned that you don't have that much free time. You're in school when the market opens and closes. Luckily for you, when you start researching about the stock market, you'll learn that when you buy or sell a stock, there's a timing option, which allows you to put a day only or good until canceled type of order. So if you're in school at 9 o'clock or let's say 8 o'clock, what you could do is you could go early in the morning, right, or the day before, and put in an order of the stock that you want to invest in. You mentioned that you already have a custodial account, so you're already ahead of the game. When I was 15 years old, I didn't even have mine set up until 19 years old. From 14 to 19, all I did was save my money and did a lot of research until I was ready and able to start investing in the stock market. Lastly, obviously, you're debating on whether you should take the time to invest $100 that you have, and is it worth it in the end? As we age, our perspective definitely changes over time. I know at 15 years old, $100 was definitely different from what it means to me today at 29 years old. But you see, as you reference, you're fearful that you will lose it all. From my perspective, when I was ready to start investing, I didn't want to touch my principles. So whatever I was putting in, whether it be $100, $200, $1,000, I looked upon that as money that I would never touch. All I wanted to do as a kid was just constantly grow that account, grow from $100 all the way up to $1,000, and continue to add zeros along the way. So from $100, obviously that's a goal, then onto your next goal, which would be $1,000, and then your next goal would be $10,000, onto $100,000, and then onto the big one of $1 million, $10 million, $100 million. The mentality never changes, just keep adding zeros. Here's a clip of Peter Lynch's viewpoint on your fear of losing most of your money. He explains markets do in fact go down, and if you're not ready for that, then you shouldn't own stocks.
Stocks are not lottery tickets. There's a company behind every stock. If a company does well, the stock does well. It's not that complicated. People get too carried away. But you should study history, and history is the important thing you learn from. What you learn from history is the market goes down. It goes down a lot. That's all you need to know. You need to know the market's going to go down sometime. If you're not ready for that, you shouldn't own stocks. And it's good when it happens. If you like a stock at 14 and it goes to 6, that's great. You understand the company, you look at the balance sheet and they're doing fine, and you're hoping to get to 22 with it. 14 to 22 is terrific. 6 to 22 is exceptional. So you take advantage of these declines. They're going to happen. No one knows when they're going to happen. It would be people tell you about it after the fact that they predicted it, but they predicted it 53 times. So you can take advantage of the volatility in the market if you understand what you own.
And to finish off, I'm going to go back to Peter Lynch, and he's going to explain the single most important thing to know about the stock market. He'll pretty much explain to you what I totally agree with. It's invest in what you know. I love his concept of being able to explain any stock that you're willing to put money in. Make sure that you're able to explain it to a 10-year-old within 1 minute to 2 minutes. If it's too complex, stay away. If you don't understand it, it doesn't work. Peter Lynch also mentions that stocks aren't lottery tickets. There's a company behind every single stock.
The single most important thing to me in the stock market for anyone is to know what you own. I'm amazed how many people own stocks. They would not be able to tell you why they own it. They couldn't say in a minute or less why they own it. Actually, if you really press them down, they'd say, the reason I own this is the sucker's going up. I mean, that's the only reason. That's the only reason they own it. And if you can't explain, I'm serious, you can't explain to a 10-year-old in 2 minutes or less why you own a stock, you shouldn't own it. And that's true, I think, about 80% of people that own stocks. I made money in Dunkin' Donuts. I can understand it. When there was recessions, I didn't have to worry about what was happening. I could go there and people were still there. I didn't have to worry about low-priced Korean imports. I mean, I just didn't have, I can understand it. And you laugh, I made 10 or 15 times my money in Dunkin' Donuts. Those are the kind of stocks I can understand. If you don't understand it, it doesn't work. This is the single biggest principle. And it bothers me that people are very careful with their money. People will hear a tip on a bus on some stock, and they'll put half their life savings in it before sunset, and they wonder why they lose money in the stock market. And when they lose money, they blame it on the institutions and program trading. That is garbage. They didn't do any research. They bought a piece of junk. They didn't look at the balance sheet, and that's what you get for it. And that's what we were being driven to, and it's self-fulfilling. The public does terrible investing, and they say they don't have a chance. It's because that's the way they're acting. I'm trying to convince people there is a method. There are reasons for stocks that go up.
You'll notice from my thumbnail has $0 marked. The main reason I created this channel is to consistently track, share, and document my investment journey as if I started again at 15 years old. So I'll start at zero. I will constantly deposit money, whether it be $100, $200, $300. I'm not exactly sure, but I will be depositing money as we move along through the video series. You may have come across one of my other videos, and my suggestion would be to start with this one and go in order from, starting at $0 all the way up to where I'm at in the future. Hopefully in the future I'm at, 10,000, 20,000. That will come in time. I will be putting a link in the description below so you could go and check out my next video of how I will be investing my first $100 deposit. If you have any personal finance or investing questions, please comment below. I'll definitely be taking a look when I ever get an opportunity each day. And I look forward to future videos and growing this channel. Thanks a lot.